All right, let's do this. What's going on, everyone? For those of you who are returning, welcome back to the channel. For those of you who are new and it's your first time here, welcome in. I'm sure you'll be subscribed by the end of the video, but in this video, we're going to specifically talk about HEX, and we're going to be asking the question, are we ready for takeoff? And I'll explain what that means throughout this video. This one is mainly going to be a shorter one, and it's going to be a TA video more so than like a quantitative analysis video. The previous videos that we've made on, for example, pulse chain and PHEX and all of that, the reason I made Google Slides, which are the PowerPoint style of presentation you guys were seeing, is because we don't have charts for those yet, right? We don't have charts for PHEX, PLS, just because they simply don't exist. So I find that format really lets me organize some complicated thoughts in an organized, maybe clearer, more understandable way. And I know some of you guys like that type of content because you commented that. And some of you also said you like this type of content more. So don't worry, we're going to continue to do both where each is appropriate. And with that said, let's go ahead and talk about these lines that I've drawn here, right? I want to talk about these, and this first one is pretty simple to explain, right? If you kind of zoom in a little bit, you see that this is actually our highest candle close ever in terms of our previous all-time high. The body actually closed at about 16.9 cents. Now, after that, we went ahead and closed higher candles, right? These are the highest daily candles we've ever closed. This one specifically, just a few days ago, we had our not an all-time high on the wick, but definitely an all-time high on the candle where we hit 19 cents, right? Where did it close? 18.9 cents. And what I find really, really bullish is the fact that we're coming back down and having these wicks of support. Obviously, it's very early to tell if it's going to bounce off of here, but I like to see that we're retesting these candle bodies, right? I really like to see that because I've tweeted so many times, and I'll quote tweet it after this. I will say the breakout is the exciting part, but you could argue that the retest of that breakout is even more important, especially if you are more risk averse. Then you like, I think this is a general rule of thumb in trading, although I don't trade, I don't condone it, because most traders do lose money, but they say that you want to generally, again, if you're more risk adverse, you generally want to bet on the actual retest versus the breakout itself, because oftentimes breakouts can be fake outs. So I like that we broke our previous all-time high candle over here, and I like that we're coming back down to retest with wicks. And if you zoom in, I rarely ever zoom in to like a 4-hour, but just want to point out these nice little wicks at the 17-cent level or so. But more so on the daily, I find it's significant. This 16.9 cent level, which we already wicked down to 16.926, and the high was 16.934. So you could argue we've tested it. And that's why I'm asking, could we be ready for takeoff? Because previous times that we've done this, it's been go time. Check it out over here, right? Now, I agree that wasn't necessarily the body, right? We didn't actually come back down to the body, right? We came back down to the wick, but we didn't come back down to the body of this candle, right? Just barely above it. So that's why it's good to have these general like regions versus one specific level. If you were watching the videos way back when we had just started, I had brought up and said, like, during this move, I was saying, you know what, this previous level, about 1.5 cents, is very, very strong support. But I also pointed out the fact that it was actually like, I was giving you guys a range of like 13.7 cents to about 15 cents because I knew there were that was a level of significance given something like over here, this little hump over here. And yeah, I'll point out the importance of that a little further on as well, because it appears again in this sort of little TA analysis I have going for you. But again, this was previous all-time highs. This was a fake out, and then this candle closed here. So it kind of gives you this little region of about 13 to 15 cents. And we came back down to test it very, very nicely. Came back down to the 13.6 cent level. And go check the videos. Go check the videos. I was literally saying 13.7 to 15 cents. And look at that. We came down to 13.6 cents. Absolutely beautiful. And again, after we pretty much retested those previous all-time high resistance regions. It was a blast off from there, and this was an epic impulsive move that took us about 5x, right? It took us from about 1.3 pennies to about 6.5 pennies per hex, and then the rest is history. And so we pointed out over here, and we kind of skipped one to be real over here, right? And again, candles didn't necessarily come back down to it, but definitely had wicks coming back down to it. And again, you can give yourself a region with both of these kind of highs, right? Candle, this one closed over here. So it's going to have these general regions where you say, okay, something might bounce here or something might be resisted here, as opposed to just having a specific level, right? You want to give it a little bit of tolerance, a little bit of margin for even just error or just, you know, different elements in the market. But that's kind of what I wanted to point out, the fact that we are coming back down to test what, in my opinion, should be resistance turned support. And I would love to see it. Now, if it doesn't hold, right, if 17 cents doesn't hold, I wouldn't be surprised for it to come back down and test, for example, this previous little bump region. And let me point out what I had pointed out. I was going to point out back here. I pointed this out in a previous video where you have, you know, you have your, not blow off top, but you have your local peak, and then you come back down. You have this little hump that doesn't reach the previous local peak, and then you almost have this double bottom, really bullish W formation. Now, I pointed it out here as well, how you had, and I'm just looking really at candles here, ignoring that big ass wick. So you came down, had this little hump that didn't reach the previous all-time high, and then we came back down and formed sort of this double bottom W formation. It's a very bullish formation. Now, this is a very sloppy way of showing you something that's actually, some could consider an ABC wave. Now, I know it's probably not a technical ABC wave because we're looking at candles here, wicks here. This needs to actually be flat or zigzag. So it's kind of like a little more bullish version of an ABC correction, but nonetheless, the characteristic shape of that kind of ABC correction is there. Not only that, it's really a clear double bottom. This W formation is super bullish because you have this double bottom and then it's off for the races. So I like what I see here personally. I like that we had a nice little reaccumulation zone. And again, I'll point out that this region, 13.3 to about, let's bring it to the wick, to about 14.8 cents. So again, that like 13 to 15 cent region from this previous little peak gave us support. So I wouldn't be surprised if this intermediate little peak, which we're saying could be a mini fractal of that move, I wouldn't be surprised if this held extreme support. So I guess what I'm trying to say here is 17 cents, if it holds, extremely, extremely bullish in my opinion. And if we can't hold, I would expect some sort of support or bounce between the like 14.5 to 15.5 penny regions. Again, not financial advice. I don't have a crystal ball. All of those disclaimers. I'm not a financial advisor. I'm really not. But but this looks good to me. It just looks good to me. I'm just sharing what I see in the charts, but you obviously form your own opinions of what you see. So let's see. I was also going to point out this, right? These moving averages, because we pointed out how, I feel like a broken record at this point. We pointed this out so many times, right? We pointed out the fact that here's big payday, and this was our sort of last macro, really big event. We were clearly beneath these moving averages, and when we had our cross of our 21 EMA over our 20 MA, it was a bullish signal, and we had our rally, and then the opposite cross, where the purple goes beneath the blue, is generally a bearish cross. Now, these short-term crosses are also, be careful, because they can be fake outs, and they're very sensitive sometimes. So, for example, you might have the bullish cross before I guess I'm thinking of like a golden cross, right? Like when you look at Bitcoin, sometimes you get the golden cross when it's too late, right? Because moving averages are, what's the word? They're lagging indicators. Like they only tell you what's already happened. And so they're not that reliable. They generally just give you an idea of, again, average prices, but the candle needs to print for you to get that. And so I would be careful when it comes to bearish or bullish crosses in general, right? Whether they be a golden cross, your traditional 50, 200 cross on your daily charts, or even something like this, like a 20, 21 day shorter term cross, I would be careful with them. But nonetheless, we've seen that generally when we have these crosses that are denoted by these kind of yellow plus signs, we have a move up. Again, we saw it over here. We had our move up after this bullish cross, or move up. Where else did we have one over here? Move up over here. You already know. And our most recent bullish cross was here on August 13th at around the 13-cent level, right? The 13-cent level, and now we're sitting nice at about 17 cents, which puts us at $100 billion market cap, number 3, only beneath Ethereum. And I mean, I like what I see, right? We had our general reaccumulation, sort of consolidation regions when we're beneath both of these curves, and we have, you know, the blue curve above the purple curve. And even when we went beneath it over here, we tested it a bunch over here, and these are generally great reaccumulation zones. I think I pointed this out back here too. I was like, you know what, this looks like a good reaccumulation zone if you're not in yet, because people say like, oh, is HEX too expensive to get into right now? And you can just answer them with this chart over here, the HEX versus BTC, right? Because everyone knows Bitcoin, and you can just compare and say, yo, let this load. You can say, hey, yo, look at this. Bitcoin at its peak was up from launch, mind you, about 684,000x. However, if you count it from its absolute bottom and you count when it was trading at pennies, OTC, all of that, you could argue for 10 million x, right? Even 20 million x, if you consider when it was trading a third of a penny on OTC markets before we actually had, you know, actual trading. So you can make this argument, but hey, nonetheless, you can at least make the argument for 684,000x, right? Which is not bad, not bad. Whereas HEX currently on the same metric is only sitting at 353x. Remember, this is from launch, so we had our obvious huge dip after launch, and therefore the from launch metric will be less than like your all-time high divided by your all-time low. We also have charts for that, and you see that it's obviously about, you know, 3,000 and something, so about 10x difference, but that's because we had about a 90 or so % drop, like, right, like a 10x slash at the beginning. So just wanted to clear that up if there was any confusion on that end. But if you take a simple ratio of 687,000 over 353, what is that? Let me do it real quick. 687,000 over 353 is about 2,000x, about 1,946x. So let's just round to 2,000. We potentially could still have a 2,000x to go if this curve hugs the Bitcoin curve perfectly, which we've seen it can underperform, overperform, or keep on track with it. Meaning if we were to overperform, then we'd be looking at maybe more than a 2,000x from here, right? Who wouldn't want a 2,000x their money? Throw $100 in it. 2,000x that, you're talking $200,000, right? Okay, maybe they want to throw $500 in it. Talk another 2,000, that's $1 million. So I think you can use this sort of framework, right? This is a really good way to frame it to people who ask you if it's too late just because it's had this wild run up. You could argue, if you just compare this to a chart, right? You could argue this is Bitcoin at $30. We're talking, there are billionaires out there who literally bought Bitcoin at $30, rode it to the bottom here at 2, and then rode it to the top, hopefully. You'd think so, right? If they're billionaires. But yeah, I mean, it looks good to me. It just looks good to me. 335. Interesting. We're above that $30 peak for Bitcoin over here. I mean, we're just winning, man. HEX is just winning. So that's one thing to point out, right? I totally went off track. I'm trying to say is these times when we break beneath these moving averages, historically speaking, during this uptrend have been the reaccumulation zones. Now, in a bear trend, I mean, it would be, sure, you could reaccumulate during those and maybe sell the rips, but that's a little trickier, right? Yeah, it's definitely trickier. But I mean, we're in an uptrend, right? The trend is your friend. So until this decides to change, I'm still bullish because we've had higher lows. Like, I mean, just look at the circles, right? They're higher lows. They might be sloppy, but notice how they're higher lows every single time. So Yeah, I mean, I'm generally bullish. Those are my levels that I would be looking at. So just to kind of summarize, the 17-cent level all the way down to like most bearish case, I guess, the 14.7-cent level or even the 14.5-cent level. So yeah, most bearish case, 14 cents. Most bullish case, we bounce off here and it's um, time for takeoff, right? It's go time. So not only that, like these moving averages converge nicely with this level. So I would imagine strong support again if we were to come back down here to the 14, 15 cent level. And yeah, it could be go time anywhere from now until then. I could be completely wrong, right? I could just be completely wrong. So remember that. Take everything I say with a grain of salt. Again, I promise this would be a shorter video, but yeah, leave a thumbs up if you enjoy this kind of hybrid analysis because we did TA today. Sometimes we do quantitative analysis. Sometimes we just do qualitative and look at PowerPoint type slides. It's actually Google Slides, by the way. It's a free version of PowerPoint, which I like free. So yeah, I'm gonna knock out this thumbnail. Yesterday's thumbnail was pretty fun, right? The pancake swap fork. If you notice, you zoom in, we have a little push in coin there. I took these branding resources from pulsechain.com too, by the way. You can go there and they give you kind of going off topic, but if you go to pulsechain.com, if you wanted branding resources, you scroll to the bottom and it's right here, branding resources, and it gives you the actual PNG files, right? For making art, or if you're a Photoshop kind of person, you can do that too. So, and I think there's one on hex.com too, pretty sure. But yeah, that's sort of the analysis for this video. I do appreciate you watching, right? Thank you so much for 5,000, I think 400 subscribers. We just blasted right through 5K on our way to 6K very quickly. You guys are awesome. So once again, appreciate you watching and I'll catch you in a future video.